Welcome back to Your Average Investor. Today we're going to be looking at JD.com, stock ticker JD, as a request from one of our subscribers. If you haven't already, please hit that subscribe button, help us get this channel monetized. Now, JD, if you're not familiar, these guys are an e-commerce giant in China. It's basically, think of it like Amazon.com, but in China. Or maybe Mercado Libre for South America, but in China, similar to JMIA. We just did a video on JMIA recently. Very similar, but in China. Now, we're going to look at some technical analysis and then fundamental analysis. Actually, I want to start with fundamental because I'm going to go pretty quick over it. I've just finished reading through their last quarterly report, and I'll just show you a couple highlights, but I'm going to use FinViz to do so. So this was what stood out to me, and this is actually why I decided to dig into their quarterly report. It's because they actually have a reasonable price to earnings ratio of 13.34 and forward PE of 8.12. This is incredible. If you look at, as an example, Mercado Libre, a close, maybe a parallel company, they've got a P&E of almost 76 and forward P&E of 36. Amazon, now Amazon's a less of a good comparison at this point because they've expanded into so many other things like AWS. But even still, forward P&E of almost 30. So that immediately, and we'll just do one more comparison of Alibaba. Alibaba also isn't a great comparison because this is more of B2B sales and it's B2B internationally, whereas JD is e-commerce B2C nationally within China. But even still, Alibaba has a P&E of 17.8. So JD's price to earnings ratio was, golly, I'm getting inundated with these ads, was the most striking thing to me, and I had to go and check their financial reports to see if that was accurate. The second thing was their cash position. They've got a cash position of $18 per share, and you can see shares outstanding 1.4 billion. So they got a lot of cash on hand right now. And if you look at their most recent earnings reports, they are profitable, right? 32 cents, 50 cents, 36 cents, 45 cents, 59.78, on and on. In my mind, this seems like from a long-term perspective, a no-brainer buying opportunity, and just dollar cost average your way down until, if the price keeps going down, until there's a nice pop back up into the, who knows, 40s, 50s, 60s. That being said, this is not investment advice. You got to do your own research, make your own decisions. This is just my thoughts on it. Now, from a technical perspective, JD's at a really interesting point, and I'm going to introduce you to what I call my mountain theory. And mountain theory is when you have to exclude a batch of data from technical analysis because there was a mountain of irregular activity over a certain period of time. An example of this would be like GameStop. I'm not going to be using this generally when I'm doing technical analysis for GameStop right now for like day trades and swing trades. Another example would be like Moderna, right? They had a mountain, irregular mountain here that I would probably say, okay, the true top to watch out for is right here at $200. Everything above that I've got to exclude for now until there's some convincing break back above again. And so for trend lines, like I wouldn't use this as a trend line. I would use obviously this $200 ones. JMIA, another great example where they had a mountain of buying activity that drove the price from $7 a share to $70 a share. JMIA was never really worth $70 a share. And obviously, using this information for technical analysis right now is not going to be useful. JD, same thing. We've got this big mountain where it blew past this $50 range, which had been its prior resistance, and climbed all the way to $100. Not quite as steep of a climb as something like JMIA from 7 to 70, right? That's a 10x as opposed to a 2x here, but still quite steep. And this was during the COVID era where everyone just started buying everything that was related to e-commerce and selling everything that was not, and then the sell-off that happened after. There is some data that we can glean from this, but if we're doing technical analysis right now, I'm going to exclude this and, more importantly, look at this past historical data from the last 10 years to find some really interesting support and resistance levels. Right here, first off, is $35, acted as resistance before turning into support for about a year, and then broke back below and acted as a little bit of resistance again before immediately coming right back up. And then more recently, if I zoom in here, you can see it's been acting as, oh, excuse me, we're looking at the 35. Acting as a little bit of a base and support zone. And then more recently, the most recent is acted as resistance again. So that's the $35 range. The next is this $30. You can see at the $30, little bit of resistance here. It acted as support for a brief moment here, and then again resistance. A little bit of a base turned into support as a launch pad, and then a little bit of resistance before breaking through again. And more recently, you can see this $30 range acting as resistance before finally breaking through and potentially acting as a support zone. So we've got a couple of long-term lines that make it look like we could see some ranging between $30 and $35. And then if we go even more recently, we've got a pretty soft support here around the $26 range. And let me switch this back to the one day chart so you can see this. It's like there's a couple little bounces here, but I would call this pretty soft support at 26. A little bit stronger of a support down here at 24, where this was resistance, then it turned into support, and then it never quite reached again. 24 would be a no-brainer buy in my mind, assuming there's no new information about JD that would suggest otherwise. 24 is a no-brainer buying opportunity, and then same with anything below, like $20 being like the ultimate support right now, or $21 per share. So we're not that far off of this all-time low. Actually, let me check myself there. Is this an all-time low? Let's go max available by the month. It is not the all-time low. So there was a low of $17, $18 back here, but relatively close to that. And what's interesting actually is that looks like that's close to the IPO price. So back when JD had their IPO, 2014, that's kind of what we're looking at here. And I suppose it's no coincidence that that we have another support back here that wasn't showing up before, or another evidence of that being support. Let's go back to the one-day chart though. That's the wrong one. So little bit of a very strong support here, and then of course down at $21. I think it's an absolute no-brainer. What's interesting as well is you can see, this is why I wanted to turn to the one-day chart. Look at these VWAP anchored lines, so anchored to the low here, and a new one anchored to the low here. It didn't act as a perfect support, but it seemed to be a good indicator of when to get in, right? So price comes back down to VWAP. You start accumulating. It dips down. Hopefully you just can DCA in. Big pop. Same thing. You could go here. Big pop. Back down. Big. I mean, look at that pop. Like, if you just, as soon as it hits here, start dollar cost averaging in, wait for these big pops, you'd be sitting pretty. And then here we've got a little bit of a handoff. So the handoff, it starts a new volume weighted average price, and we're possibly seeing a similar pattern where it's broken below, staying below for a few days, maybe a new pop's coming up. So that's something that's interesting to me to see. Do we get that kind of pop off of this this volume weighted average catch and bounce? Now, I'm not convinced that we're going to get that yet, so I wouldn't enter today. If I see the price moving back up off of that, that would look interesting to me. Like maybe if the price comes back up and solidly reclaims this $30.40 line, then I'd look to play to the upside a little bit. Or if it continues to sell off, I'd definitely be looking for an entry somewhere down at the $26 range. And if we extend this line out, just kind of imagine with me this line right here continued and hadn't handed off, then that's actually about where, in fact, let me just add an indicator here. We're going to go VWAP, anchored VWAP, and I'm going to change the date to 1/22. So we're going to change this date to 1/22 of 2024. And I want to turn these upper bands and lower bands off. We just want to look at the middle band. Okay, so look at the purple line. So you can see the purple line now. It tracks about, it's not going to track exactly with the green because I think the green is anchored to the day after as opposed to the day of. But it's tracking pretty close. And you can see here, I mean, look at that. That makes this catch actually even more beautiful. And if this continues to break down, this I think is where we might see another catch and move up. So that would be a very interesting line to me to watch for a move down to this area. Now again, maybe this starts acting as a little bit of a support zone here because you've got this support line plus this more recent volume weighted average that it could be moving off of. And in fact, let's just see what happens if we take this and we move it forward. We're going to move it forward to 416 and 416 and see how that line looks in comparison. Okay, so it's about the same again. So either way, it's about the same. Let's take a look at the options premium, and then we'll call it a day. So here's if I wanted to enter right now because I was worried about missing out on the next JD move. This is where I'd probably find some interest. Is I'd look at these options that are about 30 days out, and I would probably look to sell something around the call 22, call 23s. I mean, excuse me, 32, 33s, right? So we've got the 32s right here for 50 bucks, and then the 33s for $35. These aren't bad, especially considering how far out of the money they are. So let's just pretend the 33 gets exercised. You buy in today at 29.42. So what we're going to do here is go 33 minus 29.42. That's a gain of $3.58 per share times 100 shares. And then on top of that, did I say 32? I think I said 33. I said 33. And then on top of that, you're making $35. So you're going to make just under 400 bucks on a $2,900 position. So we're going to take this, divide that by 2,945. That's your entry. Means you'll make a 13% gain in 1 month if you get exercised. Not too bad at all. The other thing that does, of course, is it gives you a small amount of downside protection. If JD continues to sell off to $29 per share, 29.1, right around here, where this low is sitting, hovering around, then you're okay, you're break even. Now, it's not a ton of downside protection. If you wanted a lot of downside protection, then what you'd do is probably actually sell the call 30, which limits your upside a little bit. Well, quite a bit, right? Your upside there is now $50 in price appreciation plus $110 in this, so $160, which means if you get exercised, you're cutting your gains in half. Your gains are going to be closer to 6.5% as opposed to 13%. But you've now given yourself a full $1.10 of downside protection. So we could come all the way down here to $28.30, and you'd still be break even. And that, I think, is a decent bit of downside protection. So I'd be looking at potentially some covered calls if I really like JD right here, which I'm not convinced I do, but I think it's okay. The other thing, of course, is the cash secured puts. This is always a nice way to play it too. If you want to say, hey, I'd be happy to buy, right? So I already know I'd be happy to buy if it hit this 26 zone. So it's like, all right, let me sell these put 26s. I'm not going to make a ton of money off of that, but if I get exercised, I'm happy to buy 100 shares at 26 bucks a share. And if it doesn't get exercised, I walk away with 18 bucks. Cool. Go get a Subway sandwich or two. Not too shabby. So those are a couple ways. You could also look at long term, right? If you're like, well, I'm really, this is an interesting way actually to play some long dated puts. Is you could say, I'm very bullish on JD long term, and I just want to collect some premium. Maybe you wouldn't go 2 years out. That's kind of excessive. Maybe you go a year out. There we go. The data's loaded. So then I'd say, all right, well, I'm going to sell these put 15s. Well, there's nobody even on the bid. Maybe these put 12.5s, and I'm going to collect, hopefully I can get a spread between the bid ask and collect $35 per contract, right? And then hopefully over the next couple of years, or over the next year, that just expires worthless and you keep your cash. But if you're doing this cash secured, you're putting up a ton of cash for $30, right? You'd be putting up $1,250 for 30 bucks. So 30 divided by 1250, you're looking at a 2.4% gain. So not a super wise position in my opinion there. Maybe a little bit better if you came up to these like 22.5s and got 200. So go 200 divided by 250. Now you're looking at least 8%. So you're beating the rate of inflation at least. Well, depending. But that's how I'd be looking at JD. It's an interesting play, not my favorite, although they appear to have some incredible fundamentals right now, and so it may be good just to be dollar cost averaging in. As always, this is not advice for you specifically, just my opinion on it. And as always, hit that subscribe button, and I'll catch you next time.